Thank you very much. And thank you, DJ I Awake. You always make these jingles. And if you have jingles every time you go somewhere, you get used to it. So when sort of tomorrow is going to be, I have more jingles. The day after it's going to be completely quiet when I walk into the room. And you kind of miss that jingle. So thank you very much for that, Thomas. Now we're going to look at how to pick the winners, how to distinguish vision from hallucination, and how to see what's really, really relevant. And we've invited some of the most interesting investors that we could find. First, we're going to start with Sara Wimmercranz. She's founded Footway. She's been an entrepreneur. She's the founder of Backing Minds. But now she's also an investor with a special strategy for finding gold where others might not find it. She's being joined by another entrepreneur, Susanne Najafi, founder of 11 and of other companies, who is also co-founder of Backing Minds. And we're going to get a very different perspective that I hope will both inspire and teach us how to pick the winner. So welcome up on stage, Susanne Najafi, Sara Wimmercranz. Clickers are here. Stage is yours.
Hello.
Hello.
Let's talk a little about prejudices. You've all heard them. You've probably all said them. The truths of the startup industry.
There are no good companies outside of Stockholm.
Really? As a matter of fact, 74% of all companies in Sweden are started outside of Stockholm.
And you should know about Älmhult, right?
Yeah, exactly. Älmhult is actually the town I come from, so...
Okay. There are not enough female founders. We didn't get any applications. Immigrants only start low-scale businesses like kebab places and dry cleaning places, right?
Not quite. 16% of all our entrepreneurs have immigrant background, and more than 30% of all the companies are founded by women in Sweden. And research performed by Tillväxtverket showed that women actually want to grow their businesses even more than men do.
So who gets VC investments? We looked at all share remittances, and this is what we found. We looked at the companies founded in Stockholm versus the companies founded outside of Stockholm, and the share of capital that they get. And what you see here is that the companies outside of Stockholm, the 74%, they only get 8% of all the VC investments.
We also looked at the amount of money that would go to companies founded by men, companies founded by mixed teams, and companies founded by female. And this is what we found out. 96% of the capital goes to companies founded by men. 4% of the capital goes to mixed teams. But there's something wrong with the pie, right? There's a piece of the pie missing. And that's because the amount of money that goes to female-run companies is close to 0%. Less than 0.1% of the VC capital goes to female-run companies.
And this is also confirmed by other studies. Breakit showed that of the 16.8 billion SEK invested last year, the amount that went to female-only founders was negligible.
All right, to summarize this, to raise capital, you should either be a Swedish man from Stockholm or bring one. Exactly. Why is it like that? We know that out of the 100 largest VC companies in the world, only 7% of the employees are female. And if you look in Sweden, it's actually more common to be named Johan or Henrik than to be a woman in the industry. And I mean, it doesn't, exactly, someone is like, what? It doesn't matter how smart, well-educated or experienced you are. if you work in an environment that is that homogeneous, you will be psychologically affected by that. And it's actually called a similarity effect, and that makes us want to hang out, recruit, and invest in people that are very much like ourselves.
Another reason is that the industry mainly depends on deal flow, but because of the amount of deals flowing in is so big, you need techniques and people to point out the right company for you. And in many times, it basically means that it's a friend's friend that you invest in. That's why you get this homogeneous network. And what happens then if everyone looks at the same apartment, or the same house, or the same company? It becomes damn expensive. By investing beyond the bubbles, we find great potential.
So we've talked about deal flow. Of course, we rely on deal flow too. We have a huge deal flow. And it's amazing because it actually looks different than the other companies' deal flows. And this is very interesting. Can it be that similarity effect works both ways? To not miss out of any potential, we believe in what we call deal find. And it's actually a lot of quantitative and qualitative analysis that helps us identify underinvestment segments to find the right entrepreneurs. And we meet all the good companies in underinvested segments, and we invest in the best one. If there is no companies within that segment, we have the ability and possibility to create a team that will build a company. And that's what we call the match-made ventures.
What is in common in these underinvested segments is that you often have a very angry and dissatisfied end consumer, customer, or end user, or a forgotten one. In the money transfer industry, you pay 15% to send money to your loved ones. You have big players as Western Union taking these fees. That's how we found our first investment. We looked at these really dissatisfied customers who were also forgotten. We looked at immigrants as a target group. What were their interests, problems, opportunities?
So we have been traveling a lot. In less than a year, we've met more than 1,000 companies, more than 3,000 entrepreneurs in 48 different municipalities.
And this is backing minds. This is what we do. Other people's prejudice is our opportunities. So we focus on return. That is our main and top focus. But in the long run, we create the new role models, the new investors of tomorrow. Sorry.
Yeah. So it's like a battle with so this is our first investment. It's called Transfer Galaxy, the company, and they had contacted more than 100 investors, and they did not get one meeting. After our investment, they have sent more than hundreds of millions through their platform.
This is Monica, founder of Horse Me Up. She heard that she was too old to start a tech company. And now she's digitizing retail in Sweden's second largest sport, horseback riding.
This is Anne, and she faced so many challenges because of who she is. Now she's shaping the future of health tech through the latest technology from DNA.
What happens next? Investing in homogeneous networks, missing out potential outside of them, it's a global phenomenon. So we see huge possibilities ahead.
So we only just started our journey. And we are stunned by the amazing underinvested entrepreneurs we meet every day. We have a long way to go, but we are already changing the statistics. Thank you.
Thank you very much.
So much.
Have a seat, please.
Thank you.
And for the ones of you that meet a lot of venture capitalists, they all say the same thing. We're not just money, we're very active investors. And then they say the same things, right? I think it's super exciting to see a strategy that is so different. And you're going to get accompanied by another gentleman who has his own strategy, and it's working very well. He doesn't like when I say this, but he is probably one of the world's best business angels. He's done over 300 investments in younger companies. Only the first 25 exit gave 6 times back the money, and there's a lot of companies to go. They've been in companies from Alibaba to all kinds of other companies. He is José Marín. Very welcome up on stage. Welcome back to Stockholm. Please have a seat.
Great pleasure to be here.
We're going to discuss strategies and how you pick the winners. So first, could you share your investment strategy so that we all get on par here?
Okay, first of all, I mean, most of the capital that we've deployed is our own money. So, the type of investments we make, generally is related to making a return and not necessarily the biggest return. So we generally don't co-invest, we don't lead rounds. We are a second investor into a very specific round so that we don't step on the feet of some of the large VCs. And that has allowed us to come into a very large number of businesses that otherwise would have been very hard to lead. We focus on the things that we understand very well, which are marketplaces. About 75% of our investments are on marketplaces. My partner and I have built several businesses in the space, and we want to continue supporting what we understand well and where we can make decisions quickly. Most of our focus is in the US. Once again, we're a global investor, but about 70% plus of what we do is in the US. We think, that the US continues to be a very interesting place, but at the same time, both being from not US, we want to make sure that we pretty much take advantage of the deal flow that we get. And a very interesting piece of it is, throughout the development, we don't join boards, and that gives us a possibility by owning a small stake in the company. Whenever there's an oversubscription or a very big excitement on companies, we can de-risk our position by selling, a piece of our investment. And in a lot of those, we end up making 5, 6, 10x by selling 30% of our position, and potentially those could still go out of business. Now, it's true that for those that win, we probably could have made more, but at the same time, we hedge, and we have the opportunity to do that because we are not in the board and because we are not the lead.
But it's also many US investors, they want to invest within sort of 10 minutes bicycling from their office, but you're in Istanbul, you're in St. Petersburg, you're everywhere. So you have you also look at sort of underserved markets. Could you just elaborate on that a minute?
Yeah, that's the reason why we want to invest on the things we understand very well. We understand the dynamics of marketplaces, so to be able to make a call and a quick decision on an investment, that we don't understand well could be very complicated. But marketplaces dynamics are pretty much similar throughout the world. And when we see, businesses that have been proven, in other geographies that are being replicated, it's pretty easy to evaluate. And frankly, even though we are global investors, we like to focus on businesses, on markets that are big. Most of what we do outside of the US, are obviously Western Europe. We love Scandinavia. We've done a couple of great things here.
A big market.
And it's not a big market, but big dreams, and I think that there's some pretty amazing things that have been created here. So Western Europe in general, outside of that, we've done quite a bit of stuff in Russia, stuff in Turkey, stuff in Brazil. So, it's not that we invest everywhere, but at the same time, we focus on those markets that we think can really move the needle.
Okay, so now we have a good understanding of the different strategies. So how do you pick the winners? I know that you're looking for underserved communities and spaces, but in that, how do you know if it's a dead duck or if it's something absolutely amazing? What are some of the traits? Is it the technology, the team, the sort of sparkle in the eye? What could you just elaborate on that?
A little bit of everything that you said, I would say, but I think the problem-solving ability is very important. You don't have to have a track record of building like thousands of 3 companies, but at least solving a lot of problems. I think that's a really good thing.
So problem-solving ability, okay.
Because every day running a business is just a lot of amazing problems coming up, right?
And we see a lot of entrepreneurs who work with really scarce resources. And that brings out a certain creativity. So we actually like, looking in these areas where you don't have anything, or these really underinvested segments, or where you have like angry customers, and then, someone comes and like with nothing creates magic.
What do you look for?
I mean,
Marketplaces, yes.
yes, but we generally have a very well-structured approach. That doesn't mean that we don't do things that don't fall into this, because having that flexibility is something that I think is valuable. But we like to think about markets that are big, potential of $1 billion or more. We like to think about opportunities where you could potentially be the market leader. So, can I win the market and can I become, number one? I like to invest on companies where the dynamics and capital efficiency of the business is attractive. So, there's cases where you go into a very capital intensive business because you really believe that it can be really, really big. But otherwise, we like to focus on businesses that are capital efficient. Most importantly, I would say, is the people. No? There's been a lot of times where I have seen pretty amazing ideas or businesses where I haven't had the best fit with the people, and I would never invest in that. I have had other situations.
Is it gut feeling or is it analysis?
It's a mix. I think it's a mix. But frankly, when we invest early stage, there's very little background checking that we do at the early stage, because surprisingly, you find that a lot of the background check that you do is not necessarily what you expect, because a lot of the very successful entrepreneurs not always have performed well, in their previous jobs or so on. So it's kind of counterintuitive. So it's more getting a feel of how the entrepreneur is thinking, his level of ambition.
I'm trying to give these guys some clues on how to get your money here. You're not making it easy.
No, I mean, his passion, and his drive, and I think that's for me.
You're saying his, but you're saying her.
Her, yeah. Both. No, and I think, and I wish that in the entrepreneurial world, the whole world could embrace, women the same way that I'm seeing what you guys are doing. I think that we will all benefit of having more diversity there, and having more women entrepreneurs and more women investors. So, I'm very happy to see that people like you are taking the lead.
But you're doing that not because you're doing it not because you want to help. You're doing it because it's smart.
I think it's that the industry will change when they realize it's a matter of survival. The entrepreneurs will pick the VC companies as well. They have to evolve a little bit, I think. But also, it's too much. The more return to the less risk, right? It's a very easy industry. So when they realize the return of it all, it will change, I think. It's a matter of return.
Because we believe that there is a shift happening now. So more power is going to the entrepreneurs. I mean, looking last year, we had the crowdfunding reaching the same level as VC. So there are other ways to get capital. So entrepreneurs will more choose their investors. And looking at the values of millennials, it's not the same Wall Street culture that is interesting. People want to do meaningful things. They want to do drive business, grow, and do good.
But do you think that as an investor, should you have a social agenda or want to do good, or is that a distraction if you want to get as high returns as possible? Starting with you.
I mean, I generally don't like to invest on things that don't feel right. And I mean, maybe that's not because I feel that I'm going to make more money or less money. But I do think that from the perspective of conviction, I need to do something that I feel good about. And, there's things that I don't feel good about that even though they could be amazing businesses, I would not invest. And not because I could not make money, probably.
But on the other hand, would you back something that is really, really good, but maybe you wouldn't make so much money?
Well, in that case, I would probably do it more as a charity. I definitely, on everything that I invest, I have an expectation of having a good return. And I do think that there has to be a balance between, someone that invests for profit and what they do, in the philanthropy side. So I definitely do quite a bit of stuff, and a lot of the money that I make on a yearly basis, I give it away, hopefully in a smart way. So I do think that you need to keep that balance, and you need to make sure that you continue to do good. But, from the perspective of my investments, I want to make sure that I invest because, I'm making money. But
and what about you?
We want to make money. That's our top focus. But we believe that you make money when you satisfy your consumers or customers, and you are the preferred choice. We love gaps, so we invest in the gaps that we see. So it's not like we look and like, yeah, let's invest in a female entrepreneur. We look at an underinvested segment, look at all the companies and like, who is the best one? Wow, that happened to be a woman. Or
But I would also assume
someone
that you can get in a little bit cheaper than the traditional VC deals, because if you're the only one knocking on the door, rather they knock on your door. Is that also part of the strategy?
Of course. That's why we go like hunt companies, if you want to call it like that, because we have identified a gap that we call the value of death. Sarah, if you want to
Yeah, I mean,
explore
except
that,
for the fact that the companies outside of the homogeneous networks just naturally gets a little, the valuations gets a little lower. We haven't identified, but even the government have identified has identified the value of death, and that's in between the business angels and VC, right? It's really, really hard to raise something in between 2 and 20 million, because the VC funds have become so large, so there's no economy for them to invest those kind of sums. So we work there in those kind of. But talking about investing in good companies, I believe that you mentioned that as well. Like digitizing makes the world more transparent, and if the company doesn't do good, then the customers will leave for a better company. I mean, look at Uber. Actually, like it's. I think that a lot of customers are leaving the company because of their lack of good values.
And if you would give one sentence, one advice to somebody that wants to build a fast-growing scale-up, because that's what we're going to speak about next, what would that advice be?
Be passionate about it. Find something that you're passionate about.
You will find problems that will hit you every day, but it will only make you stronger. Keep on.
Choose the right team. Team that gives you energy and that's a good thing. Team.
Thank you very much, and you'll be around in the break, and people will probably flock you with ideas to invest in. Thank you very much. Thank you.